Hello, everyone. Good morning, good afternoon, good evening, wherever you're checking in from, and welcome to the 88 MPH Community Call. I'm your host, Whipper, and I'm a crypto enthusiast and an 88 MPH community volunteer. We have an exciting call lined up for everyone today, and it's our pleasure to host CMS Holdings. A couple of reminders before we get started. When you're on stage, please keep your mic muted unless you're speaking. If you have any questions, please feel free to raise your hand so we can bring you up on stage. Our open to the public Q&A section will run at the end of the call. And a quick reminder that we'll be closing the call with a $100 raffle giveaway to one lucky listener, so please stay tuned to the end. On the agenda today, we have introduction into CMS Holdings, trading and current market analysis, OTC deals and their importance, regulation in DeFi and stablecoins, regulation in DeFi and stablecoins, and yield farming. So please sit back and relax. With that, I will open this up to Joe from CMS. Joe, can you please give us a quick introduction into CMS Holdings, who you are, and what brought you into the crypto space?
Cool. Yeah, I'll go in reverse here. Actually, I'll do the personal intro first and get into CMS. So just quickly about myself, I've been in the crypto space since 2011. So it's been quite a while now. Back in the day, there weren't even really much exchanges to kind of transact these things on. I used to buy Bitcoins with a gift card through internet relay chat rooms, and it was just totally different time. So I've been here for quite a bit of the haul. Early on, I had been doing a lot of independent mining projects, running nodes, mostly on Bitcoin. Back in the day, script-based consensus coins were large too. So I had quite a large mining farm doing profit switching across things like Litecoin, Vertcoin, Feathercoin, a lot of coins that people don't even know about nowadays. I had spent a little bit of time in traditional finance before jumping over to a startup called Falcon X, which functions as a digital assets prime brokerage. And over there, I had been helping to run the OTC trading desk during US hours. So kind of tying that into CMS Holdings here. For those who don't know, CMS operates as a cryptocurrency hedge fund. The fund itself has been around since 2019, but most of the team here has been in the space for quite a while as well, going back to 2013, 2014. So a couple of our partners here, Bobby Cho and Dan Medashevsky. Bobby had been running Cumberland Trading's OTC desk out of DRW, and then similarly, Dan had been heading up Circle Trading's OTC desk. So a lot of the team here has previous experience on the actively traded side of things. Most of the guys have worked on a crypto OTC desk in some capacity, whether it be at Circle or Kraken. We've got quite a bit of experience early on at some of these early stage companies that are now quite large. And for the fund itself, we operate on a hybrid structure. So half of our fund is dedicated towards actively traded strategies, and the other half is then venture style, longer term investing. Tying that into kind of DeFi, what we do on the venture side is look to invest in projects that we could see ourselves becoming end users or customers of to some extent. So that leans pretty heavily on the application layer. Things like lending markets and DEXs are probably two of our main priorities. Derivatives protocols have become kind of a large focus for us over the last, I would say, 6 to 8 months. And what we do there is kind of look to get as hands-on as we can. So at CMS, we don't have any outside capital or limited partners, so we don't have a lot of boxes to check as far as risk parameters goes or things that we can or can't do in DeFi. So we look to participate kind of across the whole swath, pretty much staking, liquidity provision. We do actively trade on a lot of these platforms as well, so a lot of automated strategies on DEXs. We're pretty large traders on things like Perpetual Protocol and starting to get ramped up on a lot more of the derivatives platforms like DYDX. But that's kind of us in a nutshell here. Really, we look to just be as hands-on as possible because we've seen these things kind of grow from nothing, and we feel like that experience kind of lends a lot of use to us just in terms of being able to use these things.
Hey man,
That's
John,
awesome.
80 MPH. Were you early stage investors in Perpetual? Is that, or were you? I don't have to disclose that, but
yeah. So I mean, that one's been launched for a while. So yeah, we had been early investors.
We love Perpetual. We think they're great. We're just wondering because I'm wondering if that's something that that was partly influenced by you. That's quite interesting. Is that from
Yeah. So I mean, when we had done our initial investment in the perp team, it was pretty early on, kind of in the derivatives front. We had just really seen yield farming explosion happen over the summer, and then some of these derivatives platforms started to come online. So Perpetual was one of the larger ones we had looked at. Things like Hedgic, which was a little bit more of the anonymous fair launch type deal. But we kind of lucked out with perp. I don't think that, I mean, we knew something was there. We'd been very heavily focused on derivatives in general because we just hadn't seen a lot of it yet. So we got pretty lucky getting intro to those guys pretty early, and we've been with them pretty lockstep along the way here as they continue to increase or improve the platform, I should say.
Nice.
As with tradition, before we dig deeper into CMS, for those who are joining us and are new to 88 MPH, 88 MPH is a protocol that primarily focuses on offering users a fixed interest rate on their crypto deposits, as well as floating rate bonds and more. We're going to take this back to you, Joe. We want to sort of get like a high level overview of the fund. Curious to know, like, how did it start out? Like, maybe is there like a cool story behind how it started out? Maybe you could talk a little bit about the motivation behind starting it. I think that's a great place to start.
Yeah, definitely. So pretty much all of the guys here have known each other for a while. So Bobby and Dan, two of the partners, had been trading with one another while Bobby was at Cumberland and Dan was at CMS. And then a lot of the guys had either worked for Dan at Circle or even further back at Kraken. So when Bobby and Dan had kind of wrapped things up on the OTC side of things, I think they were kind of just looking for a way to keep doing what they were doing, but more of on their own accord. So it's kind of been a reassembly of crypto friends, if you will. And that's kind of how we got started here.
That's awesome. And Joe, can you just remind us how long has the fund been operational right now?
So we've only been together as an entity since 2019. So we're coming up on 2 years here in the fall.
Nice. I know that whenever we have an OG like yourself on the stage, all of the users always want to ask, we're getting into the market topic right now. I'm curious to get your take on where you feel we are in this cycle. Would you call this sort of like a small correction before a continued bull run? Would you say we're in a bear market? What's your feel, having been here for so long and seeing so many different cycles? Give us your sense on your market take.
Yeah, definitely. I mean, I guess just to preface, like this one has been totally different to me. I guess just from like the trader's perspective. So I suppose this is the fourth kind of major market bull run that I've been around for. And in the past, it was just, I don't know. In the past, things got to a point where you really started asking yourself, like, wow, this is crazy. Like, how much more can we keep going? And I think a lot of altcoins kind of got to that point this time around. With Bitcoin, it was a little bit different. I mean, 64K is a massive number, and I think everybody definitely had a little bit of euphoria up there as well. Excuse me. But it didn't feel quite the same as just like, wow, we are totally out in nowhere's land. I can't imagine it getting any higher. And I think that's probably due in part to the fact that the market is just so much larger at this point. I mean, Bitcoin itself coming up on the $1 trillion market cap, it takes a lot more capital to really move this thing around. So obviously we've seen these crazy liquidation driven drawdowns, and they do get quite scary, but I'm not sure if we're going to see the same level of sort of decimation in some of these larger names. And by larger names, I mean Bitcoin and Ethereum specifically, that we have in the past. So I guess generally speaking right now, I think we remain moderately bullish. I'm not sure we're totally convinced that we're going to have some long-term drawn-out bear market. And a lot of that's kind of been signified more on the illiquid side of things. So on the venture capital side, you're still seeing raises go off at crazy valuations, especially in the equity market. things like FTX and some similar institutionally focused platforms still just raising large swaths of money in the blink of an eye. So you kind of start to ask yourself, well, if this much money is still floating around on the investment side, is it really time for, I guess, this open market bear drawdown that everybody's kind of been complaining about on Twitter lately? I don't think we're totally convinced yet. I don't want to say it's definitely not a bear market or definitely is a bear market, but we're kind of taking things as they come. I would say we're moderately bullish here overall.
Great answer. What importance, if any, do you give to things like Plan B's stock to flow model? Do you buy into it? What's your take on that?
That's a tough one. I don't know. I mean, it's a fun one to kind of stick to in theory, and I guess we have adhered to it pretty closely historically now. Kind of like I was saying on this bull run being a little different than the past. I think this will be the one that tells us if there's some real truth to the stock to flow metrics or not. I mean, we watch it, we think it's interesting, but we're not saying like, oh, hey, we've deviated this far from stock to flow, it's time to buy, or we've deviated this far above stock to flow, it's time to sell. I think it's more kind of just a fun metric that we follow.
Without opening too much into some of your trading strategies, excuse me, what percentage of your strategy would you say is focused on technical analysis versus fundamental?
Very, very little, I would say. I mean, technical analysis in the sense, are we drawing lines on charts or Fibonacci retracements, things like that? We definitely do not do that at CMS at all. I think technical wise, we do keep our eyes on quite a bit of like order book information or just order flow in general. Funding rates are a large technical indicator for us. Things like that are what we tend to keep our eyes on.
Yesterday, Joe, we briefly talked about OTC. I was curious if you could sort of expand a little bit on that. Are you guys involved in different OTC deals? When you mentioned OTC, is that just something you mentioned that's how you guys purchase different cryptocurrencies? I'm curious to know if you guys are making deals happen through OTC, and maybe you can explain to some of our newer listeners, the importance of OTC deals and why they're important for buyers and sellers.
Yeah, definitely. So, I mean, I guess just for one, like OTC on the trading side is typically used when a buyer or a seller wants to get rid of a larger slug of assets. So, maybe you've got a bunch of altcoins and you don't want to put it through Uniswap because you don't want to be front run or there just isn't liquidity there. OTC kind of just serves as that purpose for just a larger pool of liquidity. And it also, most of the time, doesn't really affect the order books on exchange. So the idea generally is you just want to put a large order through. You don't want to slam the order book one way or the other. You look to the OTC desk to do that. So at CMS, we don't trade too heavily through OTC nowadays. Last summer, when DeFi really started getting kicked off and it was kind of hard to execute on some of these exchanges lacking liquidity, we would look there to maybe find the size and the deal that we're looking for on a certain coin. But I think primarily the purpose of OTC really is to remove some of these larger orders from impacting the price too heavily on exchange.
For the past several weeks, we've seen huge amount of BTC and ETH accumulation from whales. Can you explain to us how these OTC deals actually come together? Like, where do these buyers and sellers sort of meet? What sort of security concerns are there? If what sort of security concerns are present when dealing with OTC trades?
Yeah, so I mean, OTC, like your largest issues there are the counterparty risk. So obviously you want to make sure you're either going to get the coins back or the dollars back forever or for whatever you bought or sold. So a lot of the time on the institutional side, this is pretty much handled for you. Everybody's KYC'd, everybody's signed contracts. There's not as much to worry about. So typically, if you're looking to deal with an institution on an OTC, you go out to one of these larger trading desks like Genesis or Galaxy. Falcon X is another large one nowadays. Cumberland is still around. And you would do the deal directly with those guys, and then they would handle the other side of the trade. I know in DeFi, and especially on Telegram, there's some private groups that are set up where people broker deals. AirSwap was pretty popular for a while. That was kind of like a DeFi way of doing OTC. It would escrow both sides of the trade and then kind of transfer it once everybody's completed their ends. But really, I mean, yeah, I think the largest issue with OTC is kind of the counterparty risk there. Institutionally, you don't see as much of that, but I think DeFi wise, you have to be a little bit more concerned with who you're dealing with or what platform you're actually using.
I follow Michael Saylor and found it strange that MicroStrategies was buying directly from Coinbase. Do you know if they bought their BTC like sort of OTC? Does Coinbase facilitate OTC deals, or were they literally like market or limit buying directly from the market itself?
It would be great if they were market buying, right? Yeah, so Coinbase does have their own OTC desk. A lot of the time, the deals that go off on OTC are pretty hush-hush until it actually happens. I mean, again, kind of going back to affecting the open market price and the order books, if you hear there's a large buyer like Michael Saylor coming to an OTC desk, everybody runs to the exchange and buys as much BTC as they can so they can front run that order. So usually you don't hear much about it after the fact. Coinbase, I think generally speaking, runs a pretty tight ship, and it coincides pretty well with the what's the word I'm looking for here? It coincides pretty well with the persona they kind of give to the market, right? Coinbase is supposed to be a place that users feel like they can come and safely exchange these assets. And I think it was kind of just natural for MicroStrategy to look to them as they have one of the largest, most public facing names in the space. I'm sure some of these other OTC desks could have handled the order just as well, but it seems like Coinbase was just the place of choice on this one in particular.
What's your thoughts on Coin, the stock, and how it's performed since its launch? So, yeah.
Yeah, so I mean, I think obviously people have a lot of issues wrapping their head around the valuation. I think when it had first launched up at 400, it had reached something like $100 billion valuation, and obviously I think we can relate to that in crypto markets where everyone's looking at the fully diluted valuation. People get scared away by those large numbers. I think for us in particular, long term, we're pretty bullish on the stock. I don't see Coinbase going anywhere anytime soon, and they've really carved themselves out as that de facto platform to go to in the US. I think outside of that, really for us US users, we pretty much only have Kraken as kind of that long-standing exchange here outside of Coinbase. So I think primarily we're pretty bullish on Coin. Maybe it takes some time to get to where it's supposed to be or appreciate to where people believe it should. But I think long term, especially if you're an investor in the space that is barred from access to some of these tokens in particular, or you're a fund that can't actually hold the tokens, Coin is going to be the way that people seek exposure to this stuff. And I guess one caveat to add, or maybe not caveat, but additional point, we're big fans of Cathie Wood and ARK Invest. They've been huge proponents of crypto in general for a while. And you can go and check, I guess, their public filings and public holdings, but they've been buying up coin stock almost nonstop over the last month or two. So I think that's probably a nice positive indication to the broader market. But again, generally, I think we're long-term bullish on the stock, despite it might be all over the place for a little bit on the interim.
Yeah, totally agree with that. They are the, like you say, the de facto boomer onboarder, you know. So
yeah,
if someone else comes on and does that better, and I think they're going to stay. Yeah, cool. Does someone just put their hand up to request to speak?
Yeah, we're going to open up Q&A towards the end of the call.
Okay, cool. Good.
I want to switch gears here a little bit, Joe, and focus a little bit on regulation. So a hot topic lately has been around regulation in DeFi and stablecoins. I'm curious about what your take is on Binance's recent announcement to not only lower non-KYC withdrawal limits, but also to lower their multiple on margin that they allow. What's your take on these moves that Binance is doing?
Yeah, so I think we've reached a period where regulation is starting to come a lot faster than it used to. So I still remember, I think it was 2015, it might have been 2016 already, that OKCoin basically shut down any external users, or I should say US, Canada users from accessing their derivatives platform. And that was kind of like the beginning of things starting to clamp down. Um, Binance specifically lately, that's a tough one. I mean, I know a lot of people are still trading on there, and it was good because you could have a withdrawal limit that lets you take a legitimate amount of cash out. But with that changing now, I think this is probably the beginning of us seeing this happen with a lot of places. Um, I mean, I think a lot of us kind of expected regulation to start a little heavier this market cycle. After 2017, all the eyes on this space have kind of made things happen a little bit quicker than we had hoped. But I think this is kind of a beginning of this happening across a lot of platforms, whether it be limiting withdrawals or cutting user access off completely if you're not verified. I definitely think this is going to start to become the next norm over the maybe next 6 to 12 months, being a little aggressive there. And I also think kind of on the stablecoin front, we've seen the SEC and New York AG start to kind of talk about Tether again. I'm of the group that I think this is kind of just signaling to the public that we're going to start to see more regulatory headlines around stablecoins in the near future. A little bit of, I guess, public conditioning, if you will.
And what's your reaction to Uniswap taking off specific ERC20 tokens from their front end? I know that they didn't actually touch anything on the actual contract itself, but on the front end. What do you think about that?
Yeah, I mean, generally, you don't like to see censorship to any degree, but I think this is something that caused a little bit more fanfare than it needed to. Kind of like you just mentioned, you can't really stop what the contracts are doing in the back end, but starting to remove some of these things from access on the front end of the Uniswap API. I don't know if concerning is the right word, but it's definitely a canary in the coal mine that we're going to start to see these things happen across a lot of DeFi platforms. But what a lot of users don't know is you can spin up your own front end for Uniswap. So even if they do remove all these things to be a little bit more regulatory compliant themselves, I think there's always going to be access to these tokens or names if people want them.
Do you ever see like KYC even? I don't even know how this would be possible, but I'm just going to ask anyways. Is it even possible for KYC to ever come to any DeFi projects?
It's tough. Like, I wonder the ways that can actually happen. So I know that on Avalanche, they've been exploring ways where there would be certain node operators who operate these quote unquote KYC nodes. And then anything that needs to happen that needs to be regulated would go through these nodes instead of maybe publicly hosted nodes. Um, Outside of that, I mean, we've obviously got the geo fences on a lot of platforms and exchanges already. I'm not sure how you can really cut people out of these things completely without attacking it from the other side. So, I mean, if you think maybe like Great Firewall of China style, whether it be ISP providers blocking people out or governments blocking people out. I think that's probably going to be the only way that that truly becomes effective. And hopefully we don't see that because that just opens the door to a whole new level of censorship.
I want to talk a little bit about maybe some of your sort of strategies around yield farming. I was wondering if you could talk a little bit or as much as you can about maybe some of the strategies you guys either deploy or look for in the DeFi space. And I was curious, just tying that back into the KYC or regulation, Would that in any way affect your fund down the road in any way with regards to different regulations and the use of DeFi?
Yeah, definitely. So we try to be as active as we can on the yield farming front. Primarily, we find that it's been a great value add for us to help bootstrap protocols that we invest in by either yield farming or staking to their platform. So typically, we don't really stick or we don't rule any one platform out. We're kind of happy to play around with most things. Typically, we look for platforms that have been audited just to ensure that we're as safe as possible there. But outside of that, I mean, it just really comes down to just how the ROI looks on investment. So being primarily a trading shop, if we're just out looking for yield farming opportunities, we're essentially just looking for A, where the largest yields are, B, which tokens we actually need to provide to farm. So obviously we're going to err a little closer to stable coins just because with a lot of these pool 2 type farms where you've got something maybe like ETH and Matic that could see very different price movements at very different times, you're subject to a lot greater impermanent loss on things like that. So we do typically try to stick to stablecoin farms. Outside of that, we'll always use tokens that we receive through investments for yield farming if we can. And then just as far as the KYC and regulation goes, I don't see it becoming an issue for us. I think one of the benefits that we're quite happy about here at CMS is everything is internal capital. So without any limited partners to really answer to, the sky's kind of the limit in terms of where we can go and yield farm.
What sort of breakdown of your portfolio is fixed interest yield versus, let's just say, variable?
That's a good question. I mean, I think for us, I don't know if I could stick an actual number on it, but I would say a large majority of it is variable. I think in this space in general, kind of until more recently, you haven't seen a lot of platforms kind of offering fixed rate. I mean, we've had 88 MPH around for a while, things like Saffron, but it's kind of been a sector that's been a bit overlooked, I think. So, I mean, normally we're in some of this crazy stuff where the yields are all over the place. Maybe it's 1,000% one day and then it's back to 20% the next day. But I would say we probably sit pretty heavily on the variable side, maybe 75% variable, 25% fixed.
What sort of positive feedback can you share with your experience using 88 MPH? I know that you mentioned one of our competitors, but just curious, being in the fixed interest rate environment, what sort of things could you point at that 88 is doing really well?
Yeah, so I think just simplicity of the platform has been really great. I think that there's a lot of things that you go and log on and you just cannot figure out where anything is. So, I mean, I think that's been easiest for us. Like 88 MPH kind of has been this platform you can come to. It's very straightforward about what you're getting. And I think it's also very straightforward in terms of how to actually interact with it. So I think just simplicity in offering those fixed rates is something that we've seen beneficial from the platform. I mean, and not to talk too much about competitors here, and we are fans of Saffron as well, but I know that a large point of confusion with the tranche debt type platforms has been users just literally don't understand the differences between junior and senior debt. And it kind of makes it a little tougher just to kind of park your funds and seek that fixed yield when you can't get past just the initial educational gap there.
Recently, there's been a lot of chatter around Coinbase's move to offer 4% fixed lending on USDC. I'm curious or not whether that's something you guys are taking advantage of, your thoughts around it, how they're even achieving that.
Yeah, so I think for us, like the kind of institutionally, or I guess it's a little bit more of a retail focused from Coinbase isn't quite as attractive to us. So on the institutional side, you've also got these lending desks as well that do OTC transactions. So instead of the trading side of things, maybe you're looking to lend or borrow assets, and there are larger desks that can facilitate this. And a lot of the time you can beat rates that would be offered by Coinbase. I guess the thing to keep in mind is that Coinbase is probably earning a little bit higher than that 4%, and some of it is staying with them as the fee. So the user really only gets to see a portion of what they'd actually be earning elsewhere. So these aren't really super attractive to us. It's not something that I would see ourselves using in the near or long term. I think generally we would probably stick to either the DeFi front or maybe some of these OTC lending desks to look for yield.
Rumor has it that both Aave and Comp are working on the creation of their sort of separate farm specifically for institutions. What's your take on this? Do we need to bring DeFi to institutions, or can institutions come to DeFi?
I guess there's a couple things to hit on there. I mean, there's the regulatory front, which we already spoke about a little bit. I can kind of just say from previous experience working on an institutional OTC desk in the space, we were not allowed, we would not be able to just go to Compound and deposit there and make use of it ourselves. So for these guys kind of on the outside of the crypto sphere, it's definitely necessary to some extent for them to have this KYC'd portion of the platform. And I think probably a second point to that too is that, and I've repeated this a bunch, I'm sorry if I've said it to you guys before in the past, but I think a lot of us in this space just don't give ourselves enough credit for how big of a giga nerd you have to be to interact with some of this stuff. I mean, even just setting up MetaMask and going to Compound and depositing some DAI is a massive haul for somebody that doesn't interact with this stuff day to day. So, I mean, I think it's fun while we have our own little party here and the suits are kind of on the outside, but I don't really see a world where they're going to come and spend the time and resources to figure all this stuff out for themselves without it being like kind of abstracted away and presented to them. So I do think it's kind of necessary.
I think it's funny that you mentioned that, because I always wonder whether or not the masses want to be in control of their own crypto or not, or whether centralized institutions would just sort of offer DeFi in the background. I think you raise a really good point. I guess that once you start to play around with this stuff and it's so easy, you just figure that like, oh, it's not even so difficult. Like anyone could sort of do this thing. But I always wonder that thought, whether or not people actually want to be in control of their own finances or not.
Yeah, but I think even if they want to be, I'm concerned that they won't be able to be. I'm concerned that maybe in order for the institutions to enter into the space fully, they will probably take a capture of the network at a certain point in time, as they continue to buy, and then they have combined enough to make a nuisance. I think they'll probably do that. I don't know if that is something that you think is true, or...
That's actually a good point. I haven't thought of it like that. Because you imagine, right? Like maybe you have a large bank that's lending and borrowing through Compound, and they've accrued quite a bit of comp tokens, and they're able to kind of force their will onto how things look going forward through governance. That's interesting. Yeah, I haven't thought of it like that. I think generally, though, what's kind of disappointing is I think in the past, when we had quite a bit less of these tokens, it was more, you've got Bitcoin maximalist camp, the Ethereum guys, and then you've got your swath of 2017 ICO shitcoins. I think there were a lot more people kind of focused on the idea that by holding crypto, they kind of hold their own bank key, if you will. I think nowadays people are thinking of it a lot less. It's, at least in the public view, just becoming an investment vehicle. And less people are thinking like, hey, this is money that I can control if I wanted to. I think we're kind of losing that a bit in this space.
Sure. Do you kind of see that as a positive, like a net positive, that we're using it transactionally rather than ideologically? I don't know.
Yeah, no, I mean, I guess there's like two sides to this one too, right? Like it's definitely a net positive just in terms of all this stuff getting used a lot more and more people looking at it. And I guess you really don't lose the camp of people that originally feel empowered by this stuff. I mean, what would be great to see are more platforms that help people get accustomed to dealing with these things themselves, rather than kind of just like, hey, here's my Coinbase referral link. You should do all your buying and selling through Coinbase and maybe eventually yield farming through Coinbase. I think people kind of being given that avenue as their first entrance to crypto is a lot different from back in the day when you had to go track down, I don't know, Mount Gox or one of these like obscure exchanges just to buy a little Bitcoin. I think it probably attracts just different users out of the gate. And we probably just see those two camps survive on into the future here. I mean, you're always going to have the people that really want to be in control of their money, but I guess we can't discredit the fact that there are a large amount of people that just don't feel comfortable doing so, and they probably never will.
Joe, how significant is EIP 1559? And do you think this sort of quote unquote claim that some ETH maxis point out about this concept of ultrasound money, is it possible? Can Bitcoin be dethroned by this notion that maybe ETH does become deflationary?
Yeah, I mean, that's a good question. I don't know that we're really going to be able to pontificate on how things are going to look when this goes live. I mean, I know a lot of people harp on the deflationary aspect of it and that it's truly going to turn Ethereum into this sound money type of token. But really, I think for me personally, I think for us at CMS, we're kind of just waiting to see how this looks in the wild. As far as like the whole Ethereum versus Bitcoin thing goes, I generally think the whole argument is ridiculous. I think there's probably no reason that both of them can't perform that way. And I think we're very much seeing it happen in Ethereum already. Yeah, I don't know. I don't put too much weight to this whole ETH becomes deflationary and now Bitcoin goes away. I think they both have their own purposes and they both can be used as money. But I don't really see any reason to pit one against the other.
Do you think once staking is like, I know it's live right now, but there's still a lot of people waiting, sort of like, I don't know, maybe for when like the official merge happens. Do you think that that will change your strategy in any way? And do you guys plan to be involved in validating the network?
Yeah, so I think for us, in terms of staking, it's always just a matter of being able to access liquidity. So you've got platforms like Lido that do offer sort of a liquid staking solution to Ethereum right now. But as more come online, we'll probably look to stick to platforms like that. If we do stake into something where assets are either locked or can't be removed for some period of time, we just have to be able to find some avenue to liquidity if needed. We run kind of amorphous here just between our strategies. So if capital is needed over here, we've got to take it from over there or vice versa. So for us, the staking stuff on Ethereum just becomes attractive as more liquid staking options become available.
Which L2s in the pipeline have you guys super stoked? Do you find yourself using a lot more layer 2 solutions right now for your sort of day-to-day stuff, or you're still primarily layer 1? What are you excited about?
Yeah, so I guess to date, I guess what is out there is mostly considered side chains, quote unquote, at this point. So we've been using quite a bit of XDAI, as Perp had gone live there initially. We do quite a bit on Polygon right now as well. And I think we're kind of just waiting on Arbitrum to really get going, and then Optimism's almost there as well. I know Uniswap is up on there. I think for us, like as far as the layer 2 front goes, we're kind of happy to play along wherever it makes sense. I don't think we have kind of a favorite in particular. What we're really looking for is something that connects all of these things. So we want to be able to make sure that if we're trading on Arbitrum, we can quickly get things over to Optimism, or if we're doing something on Polygon, we do the same. I think for us, it's less a matter of which solution we think is going to be best and where's the solution that kind of ties all these things together.
Yeah, no, totally. This has been amazing so far. I'm just learning so much about what it is that you guys are doing and some of your strategies. I want to give our audience an opportunity to sort of check in here and get on stage. Does anyone want to ask a question for Joe? Just go ahead and raise your hand and we'll bring you up. Josh, I think you mentioned earlier in the call you saw someone raise their hand. Remember who it was? Okay, we got Jake. Jake, you just need to accept. I've invited you up on stage.
Hello.
Hi.
How's it going? Hold on, I'm sorry.
Cool, mate. King Devil and Jake Displayer, you can also raise your hand. We'll let you in afterwards.
I'm trying to put it on speaker.
We can hear you, bro. Oh. Shit.
I think he got disconnected. Oh, he's back.
How do I speaker?
Can you
We can
hear
hear you.
us? We can hear you.
I know, but I can't hear you. All right, let's go.
Okay, can you what's your question, mate?
How many apple slices do you think it would take to get full?
Okay. Yeah.
Okay, a little bit of a jokester. If anyone else has a question, please feel free to raise your hand. We'll bring you up on stage.
All right, I can't really hear you guys, but I'm gonna ask the question. Huge fan of CMS. I'm a super fan. How do I get in? How do I invest? I'm gonna go down so I can hear you guys.
How do you invest in CMS? I cannot offer any help on that one. I don't think we're going to be taking investors anytime soon. You might be able to invest in CMS Intern, though. He's got a pretty good meme culture going at this point.
Hey, how you guys doing?
Hey, Steven.
Hey, sorry
Hey,
I'm here today.
we just
Glad to
brought
have you on with us, Joe. Currently working, so I can't be too long. Hopefully next week I'll be able to be on these calls with you guys. My question, Joe, and if you've answered this, feel free to let me know and I'll listen back later. But where do you see MPH as a long-term play? Like, is your investment thesis on it something as a play on this bull market to make a quick medium-term flip, or do you see this as a long-term solution for your organization?
Yeah, definitely. No, so I guess generally speaking for us, as we were just kind of going through what's out in the open market, and also kind of on the private side of things, just fixed rate lending in general has been a sector that we've seen, I guess, very little action on. I know more recently there have been platforms that have kind of come to the scene on this front, but for us, it seems like a generally underserviced kind of area in DeFi today. I think generally we think this is mostly because fixed rate lending just isn't quite as sexy out of the box as a lot of these platforms are. People see these crazy interest rates, either yield farming new tokens or some kind of boosted interest on something, and they're always just running to where kind of the highest APR is. Kind of from a different perspective there, we think that fixed rate lending is a very core piece of infrastructure in traditional markets. So, I mean, interest rates derivatives are one of the largest traded markets out there and things like that. So we had essentially been looking for platforms that at least were working on something like this or kind of had a good, strong foundation built to kind of bring us to the forefront. So I know the 88 MPH guys have been around in the space for a while. 88 MPH has been around for quite some time now, I guess, relative to the life of DeFi. And it just seemed like a team with really great builders that had something that they were kind of working towards and something that we could get behind. I think for us, particularly on the fixed rate side, is looking to platforms that kind of unlock fungibility between some of these interest rates products. So we're pretty excited about 88 MPH v3 for that reason. And I think as we start to see interest rate markets become more tradable and something with a bit more liquidity in them, it opens the door to a lot of interesting things that can be done on the derivatives front or just trading in general. So that's kind of why we were interested there and what we're looking forward to in the future.
Awesome. Thanks, Joe. I appreciate it. I'm going to have to hop off for the day, guys, but you guys have a good rest of your call.
Thanks for checking in, Steven. BG, did you have a question that you wanted to ask? Your mic working?
Hey, short Nezuko. Yeah.
Short, did you want to ask a question? Okay. I'm going to roll this back to you, Zephram. Was there anything that you sort of wanted to talk a little bit about related to 88 MPH? Any updates or anything, or status quo all the same?
Yeah, so things are going pretty well in terms of development. Right now, we're just kind of working with TrailBits to get our audit done and make sure that everything, works. And the front end is also like being actively developed. McFly has done like a shit ton of user interviews. I don't know how he does it, but we see a lot of ways to improve on the user experience to make everything easier for both regular users and protocols. And we're currently just actively working towards that.
Yes, man. There seems to be more of a focus on V2 with V3 with I don't know, working with other projects, integrations more than consumer experience, for a number of reasons, but also probably like TVL gets pushed by that as well. Was that something that was your idea, like making it more focused on partnerships and focused on corporations rather than focusing on necessarily just like the user experience?
Yeah, absolutely. The whole reason that we decided to, start a new version, start V3, is to improve the experience of other protocols that integrate with us. That's like the core of the changes that we have made.
What kind of put you onto the idea? What did you have in mind? Like which partnership in particular did you have in mind?
See. One type of integrator that we want to see is, something like Wire, the yield aggregators, who can use 80 MPH in their strategies. And this is, I guess, this is not really optimizing their yield, but to kind of offer a stabilizing element in their, in their yield farming process. So that's one type of integrator. We also want to see people who integrate with, our yield tokens, our floating rate bonds, so that, they can speculate on interest rates, and build some interesting products on top of that. And yeah.
Cool, man. I'm going to throw it back over to you. So, what do you kind of think in terms of fixed rate yield lending protocols? What does the future kind of see for them in terms of adoption, and who's going to use them, and where's going to be the biggest kind of driving force for fixed rate yield lending protocols, do you think?
Back to me here.
Sorry, yes.
Yeah, no, I mean, I think kind of like I had mentioned earlier, being able to actually trade these yield markets, I think is a huge gateway, just for the fixed rate products in general. And I guess it has a little less to do on the fixed rate side and maybe a little bit more on the floating rate side. But I think opening up these markets so where people can actually trade the rates themselves is going to just be a huge door opener for the space in general. I think fixed rate, you can kind of get interesting on the structured product side. So maybe somebody feels a little less comfortable holding a fixed rate in compound and they want some exposure to Aave. Maybe there's a composability aspect to where you're indexing these things across different fixed rates and you have a little bit less exposure to one platform and a little bit broader exposure to a few platforms, kind of reducing some of the risk on that front. Generally, I think with fixed rate products, kind of structured product side of things seems to be the easiest avenue to maybe getting a little bit more visibility on these.
Yeah, totally agree. Looks like somebody raised their hand. We're gonna bring them up on stage.
You play Rocket League?
Sorry, could you repeat that?
You play Rocket League?
As I'm having a hard time here.
Yeah, it's a bad mic.
Oh, it's bad mic.
Yeah, I wonder how many of these are like spammy. I don't know, because the most of them.
Yeah, it's weird.
I'm wondering if they are like bots. I just invited this next one, but it could be like loads of spammers for some reason. I hope that's not the case.
Yeah, we've never had that before.
Everyone has been. So.
Dino, I've just let you. Okay.
Hey guys, also big fan of CMS. I've learned a lot from you guys on Twitter, from your post, from the shit post of CMS intern, always entertaining. I was wondering, what are your thoughts on how 88 MPH would work together with Aave? Do you see them as competitors? Do you see their synergy, or do you see that any edge that 88 MPH could have in the future? I was wondering how you see their relationship.
Yeah, I mean, I don't think I view it really as competitors. I mean, obviously, lending borrow is packaged quite a bit differently on MPH as it is directly on Aave. I think, I mean, really, I think it's more synergistic. Aave is kind of the platform that provides this robust liquidity on the lending markets themselves. And then 88 MPH has a way to package that and kind of distribute it to users in a way that might be a little bit safer, a little bit more user friendly than going through the whole lending process yourself on the platform. So I think they probably sit, if it's a Venn diagram, maybe there's a little bit of overlap, but I really don't see them as competition. I think 88 MPH is more of a way to make interesting products out of the liquidity that's currently on these lending markets. Does that make sense?
Yes, totally. And as a follow-up question to that, how do you see the value extraction in the long term of projects like 88 and PH? Say, 4 or 5 similar projects pop up in the next years. Do you think it's a race to zero in terms of fees, or can there be any other value propositions that that stop at race to zero?
Yeah, no, I mean, I think one of the things that was at least attractive to us at CMS is that 88 MPH was more of a project kind of ingrained in the DeFi community. I think that you have a lot of these other projects that come out with like very large VC funding, and it feels like much more of this like startup company environment. Obviously, all of these things are startups to some extent. But I definitely think that there's some value to be placed in these kind of DeFi native developers or DeFi native platforms that maybe haven't gone out and raised these huge funding rounds before they launch. It just feels a lot more grassroots. And maybe this is value that people really just within the crypto community hold to these things. But for me personally, I think it's attractive when you have these teams that kind of emerge from DeFi itself, as opposed to going out collecting funding and launching a project in DeFi, kind of the other way around. I think that there's a lot of people that hold value to these things. I mean, even some of the more like all anonymous teams, Hedgic always comes up in mind. I think a lot of people place value on the fact that it just very much feels like this DeFi native platform, as opposed to something that's kind of being built off of a funding round and things like that, if that makes sense.
Yeah, that makes a lot of sense. I appreciate the answer.
Thanks for the question, guys. Okay, so we're nearing the hour, and we're going to come to sort of the end of the call here. But before we end things off and say our thank yous and goodbyes, we are going to run our raffle. So I'm going to ask everyone in the audience to please head over to the general chat of 88MPH and please put in a number between 1 and 50. And the person who, 1 and 100. I didn't realize how many we have in the audience right now. And the person who obviously gets it or gets closest to will win $100 worth of 88MPH tokens. Please note that they will be sent off to you in Discord via our CC bot, but it will take a little bit of time because the person who does it is actually not around right now. So if you want to go ahead and do so, that'd be great. Josh, for transparency within our own private group, if you can drop the number for me, that'd be great. This way we have it, and I will go to the general channel right now and check in to see where we're at.
Yeah, I just put it in there, but I'm going to spend a bit of time deleting some messages. One sec.
Okay. So we'll give everyone another 30 seconds. Please only put your number in once.
Boy. Cool.
Okay, and we will be closing it off. It looks like someone hit it on the nail. Congratulations to MAC. I will congratulate you in the chat as well. You hit it.
He did put his number like 4 times though. Thinking about it, 5 times.
Oh, I want to thank you so much.
He did not do that. Looking at it. Yeah, screw that guy. He put it in 5 times. Sorry. He doesn't win. Yeah.
MAC?
Yeah, he posted like 5 times.
Oh, did he? I didn't.
So numbers. I'd say, hi, my name is Tim. Yeah.
Okay. You know what, guys? We're gonna do this again. I didn't realize. Josh, thanks for catching that, my friend. Okay, we're gonna do this one more time. Again, the rules are: please put it in once and once only.
We'll just find the next nearest. Don't worry. We're using the Combobulus Michael with 81. I think is the next nearest. Oh no, when Vif. The number was 77. So when Vif, you are the winner. Nice.
All right, good point. Let's do that. I don't see him. Okay. Joe, I want to thank you so much for coming on our call and discussing all sorts of things with us. We learned so much from you. Where can people sort of follow you or learn more about you? If you want to just maybe shill yourself a little bit for 20 seconds before we head off.
Yeah, definitely. Thanks for having me, guys. I guess obviously we've got the CMS Holdings Twitter. We've got CMS Intern Twitter. My Twitter is __ swerve with a U __. My name is Joe DiTomaso on there, so you can look me up on there as well. But thanks again for having me, guys. It was a lot of fun.
Thanks for coming out, and thanks everyone for joining us. Please stay tuned for lots of new and exciting stuff to be happening around 88MPH. Please check back with us, and we hope you join us on our next calls. And for that, we wish everyone a wonderful day, and thanks for coming out.
Cheers, guys. Bye.